Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'm going to interject my financial opinions as we go through it. If you need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics and subjects, looking for potential investment opportunities, and I share that with everyone. We have a question and answer session coming up at 5 p.m. Sunday time. Mayday coupon is also still active. Let's dive in. Let's take a look, see what's going on today. We've got the DXY here, and we are continuing to head lower. Well, why is the dollar falling? It's falling because of interest rates. A slowdown is coming, and we can see that in the unemployment rate. Then we see the dollar drop as they lower yields. So as yields come down, more than likely, we'll see the dollar weaken. The 2-year yield down about 2.37% today. Pretty big move today, and we'll see if that continues and if there's follow through coming later. We don't know the size of the rate cut. Powell didn't disclose that, but the market is pricing it in. We've got the 10-year yield also down 1.4%. It's on support, at least this support I drew yesterday. And then the 30-year was also down 0.8%. So the short end of the curve fell a lot more than the longer end of the curve. TYX TNX ratio up substantially 0.66%, 0.66%. As this moves up, gold and silver are your friend. That is when they rip. That is the market condition that they do well under. And that is what I'm looking for potential investment opportunities. We, on the website, have been positioning all through here, picking our favorite companies, absolutely buying bottoms, waiting for this big move to materialize, which is coming right ahead of us. So I do think that will materialize, and it is coming. So that looks good to continue higher. We've got bond prices that are also moving up and have broken to the upside. This screams to me that people are seeking a little bit of safety. And that's where we're at today with the bond prices. 2 and 10 uninverting by 1%. What happens here? We had a huge day today in terms of up movement in a lot of our stuff. If this falls, which I expect it to, that generally means that we have a slowdown in the system. A recession is definitely possible and likely if this continues to drop. They generally put a false flag event in these. The false flag event, well, they didn't need one for the great financial crisis, but they had one here. This is 9/11. 9/11 was right here when it started falling, and these false flag events always occur. When it's falling, COVID, we were coming down and it started here. So it rolled over, and then they were like, let's pull the trigger. And here we are rolling over again, and there's probably going to be some event. It could be a banking crisis. It could be whatever the heck it is. No one knows outside of maybe the insiders. We've got gold going up about $30 an ounce. Looking pretty good, feeling good. We also have silver just ripping at 2.8%, laying down a bullish engulfing. This looks fantastic too. Absolutely rip. Silver is very well positioned in terms of where it's located on the 45-year chart here. Broken out, sitting on top of the pattern of the cup and handle, and it is ready to rip, which will then activate the bigger pattern and rip even more. Now, keep in mind, we could have a big rip here and then a consolidation on top of the big pattern. So it doesn't mean that this will necessarily go straight up, but it very well could. And this is where people are getting $300 price targets from, is they are projecting that silver price of the cup and handle and then the break of all this. But it's possible to break out, retest, and then go again. So don't expect a move straight there in 2 weeks. This is a big pattern. It might or may not take time to play out. Why do I say might not? Because if fear gets into the market and they're going to try to stop this, guys. But if it does, we could launch bigger than what most people think. So I'm positioned for it, and we'll see what occurs. That's what I'll say there. We've got platinum also up today, 1.7%. We are still underneath this breakout, but I think we are getting close here where we're going into launch mode at some point. I get it. People are getting antsy. They want it to break immediately. I don't control the immediacy there. I just control where I purchase my stuff, and then I wait for the eventual outcome. Palladium also up 3.1%, putting in the big bullish engulfing today, sitting on top of support, looking pretty good to work its way on up. So Palladium also looks good. Our boys in the mining companies, GDX up, GDXJ up, and SILJ all up. They look pretty good. We are up against resistance for GDXJ. We're just waiting for the right code to be put in for absolute launch mode, which it's going to come. It comes when the yields go down and the yield curve uninverts. And that's what I go over in those first few sections. The market conditions for this to rip. XAU to gold ratio up a little bit. It is coming from an insanely low level, guys. And this is going to make a lot of people rich who do stuff differently than everyone else, who think different than everyone else, who's piling into other assets. Let's go chase AI. You go do that. Crude oil up 2.5%. We are consolidating here. We have not broken out yet. We're waiting for a breakout here, guys. I really want to see that. Now, is this breakout possible if we get a slowdown recession? Great question. That is what we're all wondering. If that yield curve uninverts, are they uninverting it because of a weakness in the system? If the answer is yes, the path may look like that. If they're lowering the rates for, I don't know, whatever reason, and they're just trying to hide something and the economy isn't that weak, well, then maybe we could launch straight higher. Which one is it? I don't know, and I don't think anyone knows outside of maybe some of the insiders. TTF gas, we are up a little bit today, and it's been stair-stepping higher. Kind of an ugly looking chart here. Natural gas in America down a little bit. So we got the breakout, and we usually get a retest, and we'll see if we turn higher. More natural gas. We've got our boy XOP, yeah, you know me, up 2%, about 2.1. We're right on this support level. It's interesting to see which direction we go here. We could very well roll over if people start selling off because of a slowdown recession. And that's the way it's positioned, in my opinion, at the moment. It's positioned the way that I see it to actually roll over, not to go up. And we've got OIH doing the same thing. This big selling pressure candlestick pushed us lower, and that's a flag pattern to go lower, not higher. And it's positioned upward. These other ones are all positioned, this way, downward. So we'll see what occurs here. We got Newcastle coal futures up a little bit. Sideways to higher action is what I see with support underneath us. We've got the Sprott Physical Uranium Trust up 4.8%, so it's coming down. We did lurch higher today. We'll see how sustainable that is. I know a lot of people are very positive on the sector. They probably saw the news from Kazatomprom in the production. But is the macro going to outweigh the sector fundamentals? We'll have to wait and see. UX1 moving sideways for the uranium futures pricing. We've got URA up a bunch today, about 7%. Is this going to have enough to come on up in the face of a recession, in the face of a potential yield curve on inversion and declining interest rates with the Fed funds rate going down? I don't think it will. I don't think it's going to go up during a recession. I think it will get pulled and yanked back down if those conditions come. URNM also higher, and URNJ, it's all the same setup. And we do have a little wick at the top, a little bit of selling pressure occurring. You gotta be careful with some of this stuff because sometimes they yank people into this stuff. They get a bunch of buyers, they hit you emotionally, and then they offload shares to you. And this is a big selling pressure move with these guys facing upward. We'll see which direction this goes here. We've got copper up a little bit. Copper looks a little bit stronger than some of the other areas here. That does look like it wants to continue higher. I like the stair step pattern that we've got going on here. Obviously, copper, the ETF going on up, doing what the metal, doing what the metal's doing. Iron ore up a little bit. I know steel and iron ore in China's been pretty weak. We'll see if we get a turn here. Aluminum continuing higher, looking good. You know, a lot of the aluminum companies up quite a bit today. Nickel getting a little bit more of a selling pressure day to day. And we'll see if we can base out here and turn our way on up. We've got Mu up 1.87. Now this looks really good. This is a falling wedge. We got the green candlesticks coming in. It's breaking through some resistance, making a new high. That looks pretty good for fertilizers and the VanEck agribusiness ETF. We've got emerging markets also higher. It likes the weaker dollar, weaker yields, it likes all that stuff. And all these other ones, they're all very sensitive to dollar and yield. So regional banking sector up. TAN is also up because these guys borrow a bunch of money and are broke. Lithium is up. So that's looking good, bouncing off support. REMX is also up today. Baltic Dry Index is up right on support. There it is, working its way on up. XHB, which is also interest rate sensitive, it is ripping today. On the website, we expected this to occur. Don't confuse the home builders going up with near-term strength necessarily. The home builders can go up. We can even see home sales and stuff, but there are lagging things in this system that I think the Federal Reserve is looking at that can drag down some of the equities in commodities. Maybe not so the home builders, but other things in commodities. Russell 2000 is up today, 3.19. It is above support. We've got the S&P 500. It's up today, but this looks interesting. We've got a nice big bearish engulfing candlestick yesterday. We are up today. That does not mean that it negates it. We still have this in play. And this usually falls when the Fed fund rates fall. So this might still be a month or two out before this thing is completely topped and is obvious to everyone. NASDAQ also bearish engulfing yesterday, still looks good to go lower. Why do I keep looking at this from a bearish perspective? Fed funds is cutting rates, unemployment rate up, yield curve uninverted. We'll go over all this if you guys have questions during the question and answer session this weekend. SMCI is up a little bit, but again, this looks like total garbage. We've broken to the downside. Momentum is down, not up. Now, NVIDIA is up today, and we've got these ugly looking bearish engulfing candlesticks all over the place. That generally spells lower. So it's fighting its way up. The insiders are offloading their shares to you. The CEO is selling as much as he can, head over fist. Good luck with that one. And then BTC up today quite a bit, of 5%. Is this going to move into that one last final blow off top? It could. Maybe we got one blow off top left. Same with Ethereum. Nice big move up, and it still looks good to go higher with this breakout today. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got a Sunday question and answer session at 5 p.m. Mountain Time. I'll see you guys there. I know got a couple questions already sent to me. I'll answer those during that meeting. And that's all I've got for today. So we'll catch you later. This is Finding Value.